Good morning. It is 10 a.m. Not the weekend review, the year-end review. Have my coffee ready here. I'm just gonna shoot it from the hip for this next hour or so. Nothing specific to talk about. I don't think anything new that I can talk about that is new to anyone that had been following the stream. The market pretty much had been fairly meh this past week. The Santa rally was pretty much meh. If it's anything, hopefully people sell into whatever rally they see this past week. Doing nothing would have been the wrong thing to do. Let me see here. I just want to make sure that I see if there's any kind of questions or commentary. But now that it is 10 a.m., who knows? Maybe there will be some people following the stream. But if there's nobody here, that's fine too. Okay. All right. It was a pretty boring week, as I said. What I see here is SPY. How far can this bull run? If you look at the chart, how far? Roughly to 493-ish. So you're talking not that far, right? You're talking not even 4% up there. Yeah. So if you have some SPY and if you are a trader, certainly raise your stop, trim. If anything, I would look to short the market if I see that touch up there. By short, I mean do some kind of bear put spread. As I mentioned in the previous video that I loaded, I think the last couple of days, I tend to go with the using puts instead of outright short anything. I just use options to play. I do more and more options the past couple of years, but that's what I would look to do. It was a great year for the market. All those that were bearish, let me take this moment to talk about why it is never good to be totally on one side of the market, right? For those that follow me for the past couple of years, you know how I play the game. I have one foot in, one foot out. Never fully out or fully in the market because that's a guessing game that I know I can't play. I'm not good at calling the top or calling the bottom. I try to avoid being fully in the market when I see a rug pull is coming, and I certainly like to buy the dip when I see things that are oversold. So I tend to play the market that way. Even as I was predicting, wrongly predicted that there will be a recession in 2023, I was never 0% in equity. You know, it would be silly to make that kind of call and then be completely in equity, right? For me to be thinking that we could have a recession, I should be putting more money into fixed income, yet I was still in equity. In the right equity that was out. I was trying to be in the right equity. So for me, it was healthcare. It was the United Healthcare, the Humana, the Elevance, Sun Pharma, and then I was in the Pepsi, the Coke, the McDonald's. For those that follow me the past few years, that's what I was in. So I was still staying in equity, but I was also still staying in sectors that give me more protection than, say, technology. And that's where I missed the big pop last spring and summer, because as in previous recession, if you follow what happened in 2001 or 2008, technology took a beating. We didn't have the AI mania. This incoming recession stalled out. I think a large part of it is the mania in um, AI, which most people didn't see coming, right? Um, I think a lot of people, a lot of fund managers, a lot of mutual funds, a lot of hedge funds that perform way under the S&P 500 definitely make the wrong bet, and they couldn't pivot because they were hardcore into a recession is here, and they're not gonna pivot and chase, and that's why you see some return in the single digit on some big boys. The one thing about the market that I try to tell everyone that invests is you have to be flexible, right? The market can be wrong much longer than anyone can be right. Okay, so even if all the logic work on one side of the argument, the market can still be wrong on the other side for much longer and deliver more pain than you can imagine. Okay, so SPY, where we are 3 to 4% from the top, right? Uh, but at the same time, does not mean that the Q have a lot more room to run, right? Let's pan out 3 years to see what's going on here. It's not a surprise. Okay, so as always, it is at a level 52-week high, or all-time high. Forget about 52-week high, all-time high. Okay, I have not panned back on the Q all year for the most part, but as you can see, it stalled out at a predictable level. This is where T and A show you how it usually works, right? A lot of people that poo-poo on TA, which I don't understand why to this day, don't want to talk about it. What I don't get it. Okay, to me, it's essential. Even if you are long-term investors, even if you're long-term, short-term traders, day traders, long-term investors, no matter how you approach the market, ignoring TA is willfully ignorance. Okay, willfully. So you had this massive V shape that we've seen the last 3 years, right? So yeah, it's not a surprise that we stall out at this level. How much higher can it go? Can it get all the way to that 449 area? That is asking a lot, a lot, a lot, a lot. So just like the SPY, I think we are very near a level of resistance. And I would tend to be more on looking to buy a bear put spread on QQQ than FOMO into it. Okay, so be careful. Be careful. Dow Jones. Same thing here. I would be looking for a bear put spread. Yeah. How far would I go? Maybe 3 weeks out. I like that, right? It's a Dow Jones. Okay, it's not gonna drop real quick, real fast, but I think something 3 weeks out or the end of January might be a good play. Yeah. Starting Tuesday through Friday, if I see any kind of push on all three indices, I will look to probably go into a bear spread going, say, 3 weeks out. I think that's now where would I do a bear spread on DIA? Okay, probably something like 379, 369, something like that. Yeah, using the 20 MA. The 20 MA is going to line up with the ref low right here. So yeah, that's a good area for a bear spread. Yeah, let's take a look at the SPY. to see where would be a good spot. Well, wouldn't you see the 20 MA and Reflow is gonna line up pretty nicely, like 467, 468-ish. Yeah. So for me, if I was to see a bump in SPY above, say 480 and above, I might do a bear put spread, say 480, 468. Yeah, that might be something that's possible. We'll see. Like I said, until the market opens and I see what kind of debit, as I mentioned many times, I like at least a 3-to-1 ratio risk reward to enter into any kind of bear spread. So ideally, if I can see a 3-to-1 ratio, I go for that. Okay, so TLT, it is at a zone of resistance. Okay, so it's not. Let's draw in that zone. Okay, let's pan out 2 years so that we can see better. I haven't drawn a zone for TLT. Can you imagine? Can you imagine me not doing a zone? Okay, let's go back to this point here. Okay, now let's go back to 1 year. Okay, let's extend that. Sometimes it just doesn't want to. Edit, yes. I want to extend this out, yes. Okay. All right. You see the zone. We are in that zone. Okay. Can I see us trade sideways the next week or two? Yeah, it's possible. I have one call spread that I didn't get a chance to close. It was a 97,105. No, 97,101. Okay, so I will look to close it out this week if I see you know I can see TLT staying in the 99 to 100 range, barring nothing shocking from the economic data. But yeah, I think I can see a trade. Do I see it below 9? Now I have been selling puts, naked puts as well, 97 and below. I'm using the 20 MA as my bogey for protection. Not that I mind buying back the 600-700 shares of TLT that got assigned so far from 96 to 99. I wouldn't mind buying them back below 97. I wouldn't mind at all. But I'd rather just sell the puts and collect the 20 cents, 15 to 20 cents that I can get. I've been doing that for the past 2 or 3 weeks. Okay, ever since this big move into 96 range, I've been doing call spread as well as selling puts, all kind of stuff, all kind of crazy option play going out to February. So yeah, that's my play on TLT. I don't expect now entering into February. I think you're gonna see a bigger move. Okay, the market is betting that the Fed will do something in March, so I think January will be a range play. Hey, if I'm wrong, that means I get bigger gains quicker, right? Being I'm fairly exposed with TLT with 1,600 shares there, so yeah, I would I'm not gonna complain if TLT go from 99 to 105 by the end of January. Not complain at all. I have 6 call spread all the way up to 103, which means that all 6 call spread will be deep in the money at the end of January if TLT is above 103. So I will not complain at all. But for now, I think that's what I'm doing is, if on day like Friday, where the TLT dip, I sold 97 puts. 96. I sold 96 puts as well, going out into February. Okay, so I did not just sell 97. I sold 96 puts as well, as far as the first week of February. That's how far I go out. I mean, I was able to get 40 cents on a put spread with a 96, 92 strike price. Okay, so that's there. I still have not add much more to GDX. I've been selling naked puts. I sold some naked puts, of course, Friday when it was below 31. Okay. I've been selling naked puts anywhere from 30 down to 29 this past month. Okay, and then of course yesterday on this move here, I sold 30.5 as well as 30. There was not much juice below that, so but that's okay. Like I said, I do not mind adding a few hundred shares of this for this position. I also have call spread 31, 35, 31, 36 going out to the end of January into early February. So I have all kind of option play here as well, but it's cheap. Okay, I was able to sell a lot of puts that it doesn't cost me much to have those call spread. And so if GDX does not get above 32, my break even on those call spread is roughly 31 something. Okay, it's not even 32. So anything above 32, I'm making money on those call spread going out to the end of January, early February. But I like that exposure. I don't mind that exposure at all. I do think that there is still a catch-up play to GDX going into earnings season mid-January. Okay, the reason why I am bullish on GDX is, of course, GLD gold is near. Okay, well, it's knocking on 3-year high. Okay, it's knocking on 3-year high. Let's see how. Let's go back 10 years to see where we are. Okay, so yeah, it's knocking all-time high, and with the producer costs down, with cheaper energy costs, I like it. I like that they will have expanding profit margin. So I do think that there will be a catch-up play on GDX to GLD. How big of a pickup play, I don't know. I just think that over the next 3 months, the percentage gain on GDX will likely exceed the percentage gain in GLD. Okay, that's why I put so much more resource into GDX compared to buying GLD. In fact, I trim a little GLD on this record touching here. I trim a little bit, just a tiny bit, but just to play discipline. Okay, energy. Would I sell put spread below 65? Yeah, but who was buying here? Seriously, who on earth is buying USO at 71 last week or the week before? It's just insane. Okay, if you bought it, you deserve it. Okay, you deserve losing 5% of your money. Nonsense. People still buying to the global strong demand. If you are bullish on energy, which there are plenty of people on TV. Okay, if you turn on CNBC, there's plenty of people bullish on energy, but at the same time, those people are also bullish on rate falling. How can that be? How can you be bullish on falling rate as in a weakened world economy and be bullish on oil? Insane. Okay, to me, when I hear people on TV talk, it's just like the it's just nonsense, utter nonsense. They pay to be stupid. Okay. Oh my goodness. No, I am not a fan of energy whatsoever. Okay, whatsoever. The only way I will play energy is if, in fact, I'm gonna put in an alert right here at 66. If that alert go off, and I'm quite confident that it will, I would, I would. There you go. It will close the gap. I will sell puts at 64 or below. I'm not even gonna sell any kind of put spread at the gap fill. Okay, that's way too much risk. I would do it 64 and below. In fact, I would do 63 and below just to be clear of this area right here, right? So, but yeah, and if we are indeed going into a recession, then lower. Okay, I have been on record saying that if we are in a recession, energy will touch a new 52-week low, or definitely go below this 57.83. Okay, so it will go back to any recession that we have. Any, if you are bullish on oil while you are bearish on the economy, what are you smoking? What are you smoking? Because it makes no sense. It defies all historical event. So that's my play on energy. Okay, and as far as the other energy, gas, oof, I'm not. We have had a very warm winter, right? Yeah, it's been ugly. It's been ugly. There's people that are, see, the thing that I don't like about TA for some people. TA is useful, but TA, using TA alone and ignoring fundamental is stupid. There are big TA guys on YouTube. Gareth, he's bullish on gas. He has been wrong and he has been in pain with that position. Sure, the chart for natural gas is attractive, but if you look at the weather the past month, yeah, too warm. Okay, CTRA, the other play, right? Yeah, you don't want natural gas. Okay, you natural gas. Where is this? Natural gas. I'm not sure what the best. That UNG. Yeah, it's so ugly. It is so ugly. I don't care. I don't care what the chart look like and how oversold it is. Well, we have a lot of it. Supply is abundant. Warm winter last year when we had the Ukraine. Thankfully for Europe, it was a fairly mild winter, so they didn't get killed with high energy costs. They store up. They bought. What happened? For those that forgot, Europe, because of the Ukraine issue and the fear of winter, they store up a lot of natural gas last year, and they didn't have a cold winter. So this year, guess what? We got a crash, a complete crash. Okay, look at this chart, 3-year chart. Okay, this is Ukraine nonsense. Europe get crushed buying high energy from us. Oh, how foolish. Is all the natural gas company over here line their pockets with European money? Yeah. And guess what? Warm winter. Okay, the warm winter crush. There have been a few warm winter. Okay, warm winter right here, bad. Gouging, fear mongering, raping the consumer. Yeah, warm winter crash, and we still have warm winter. Okay, so eh, TA is one thing, fundamental is the other thing. You can't ignore the weather. If you're buying natural gas because the chart looks so cheap, well, if you have warm winter, now can the winter change in January and February? You better pray. Otherwise, you're gonna sit around and I don't know what would be the turnaround fundamentally for natural gas. Okay, so I don't like it. I don't like it one bit. All right, let's take a look at the FANG before we move on to something else. Meta, I trim 360. Yeah. I raised my stop there on some of the share. I would be content to go back to my original share amount that I had uh, back here. Okay, back here. I've been trading Meta, right? I had my original share, and then I bought the dip. I sold the rip, bought the dip, bought a lot of dip, anticipating the December rally, and we got it. I trim, but I'm almost out of the share that I bought on this dip here. So, but I'm content to have those shares stopped out. Should we go below three? I think my stop is, where is my stop? I believe my stop is 351. Um, it was close. It's getting there, but yeah, if it's below 351 ish, I'm out. Okay, I don't mind being stopped out on those shares, and perhaps buy them back at 338, 339. I will have, if those order, if that order trigger my stop at 351, then I will look to enter order in to buy at 339 all the way down to 327. Okay, but that's the plan right now. There's no rush. There's no rush to throw in a bunch of orders there when we are so far away. But that's the plan on Meta. I trimmed the least Google, even though I did trim at 142. Okay, that was my exit on a tiny amount of share. Where would I want a stop out? Okay, if you want to set a stop, I would say low of day Friday would not be a bad spot. Okay, so if you want to set a tight stop, 138.78, you can always buy it back between 133 and 135. It will get back there somewhere down the road. Okay, that's one thing about trading and being patient is if you approach trading as if like you never, okay, it's never gonna come back here. It will. It will. Just be patient. So if you want to get stop out at 138.8 ish and buy back $3 lower, $4 lower, $5 lower, why not? I don't mind. I take it. I take the $5 gap down. Okay, save myself $5. But I do like Google and Meta going into next year. I sold out of Amazon. I'm out. I talk about it on the chat group that I trim, and then I look to exit completely. And yeah, I'm done. Okay, this is about as boring of a center rally as you can get for a retailer. Guess what? I guess shopping wasn't so hot, huh? I guess the consumer wasn't gorging on junk because it's Christmas. You gotta buy. Guess what? Yeah, it's a good time to trim last week. It was a good time to enter in since Thanksgiving. Yeah, since Thanksgiving. If you got in, right here, Thanksgiving. right here, Thanksgiving, and then you get out. Okay, so yeah, nothing to be too excited there. Microsoft, I trimmed 10%, only 10% between 376 and 377. I took out 10%. That was a tough range. See this right here. This range right here has been very tough for Microsoft for a whole month. Going back to right here, this is December 1st right here. December 1st. And it was there the whole month. It was banging the door. Yeah, not about 10%. Where is my stop? Okay, I am putting in a stop at the 20 MA for another 15% right there. I'd be content on shaving off 25% of my holding of Microsoft. I can always buy it back in the zone, in the gray zone. Order in to trim, I think 10, 15, 25. Yeah, I think another 20%. So altogether, $10 below, saving myself on 30% of my holding. But yeah, that's the tight range, very tight. Okay, and then I do have a stop for half the share at 364. So if there is some kind of event that there's a major sell-off, then I'd be at least half out there, right? You can always buy it back. Okay, as a trader, okay, you got to be disciplined. Nvidia, I have sold a lot of my Nvidia, and I'm down to less than half compared to what I had here. Okay, I load up on Nvidia on this down move here, and then I sold half. But that half is basically all the share I bought here. So technically, the half that I have are the half that I bought that I have here. All right, on this head and shoulder move and retest. So yeah, I have whatever I bought on this down move here, it's out, all out. Okay, so yeah, I'm very content on my position on Nvidia. Let's talk about healthcare. Let's pivot into healthcare. I had 5 put spread on Humana that expired. I did not buy any share, but I will look to buy the share. To me, here in the 456, 448 range, I like it. I like Humana in this price. To me, it's my favorite play as far as healthcare. Okay, so for those of follow me for the past 2 weeks, I have talked about money there. All right, but I like it. On dip, I'm buying. Okay, if on dips, I'm buying. Can it breach and go down to the 4? You know, it could. I've been selling put spread. I have been selling 440, 435, and then 435, 430. I even sold 430, 425 put spread last 2 weeks ago that expired worthless. So yeah, I make decent money on puts there, and I will look to reload as well as buy share if I see 455 and below. Okay, so I have ordered in already. I have ordered in already to buy from 455 all the way down to 448. Okay, so that's my buy range there. So if it trigger, that's fine. I have not trimmed any ELV. I have not trimmed any United. Let's see. The other healthcare that we talk about is, of course, Cigna, which is the least attractive of all. Okay, so now I have no interest in Cigna. Humana is top of the list, and then UNH, and then ELV. Okay, that's the order of things that I like as far as the healthcare. I'm out on LH and DGX. Okay, I'm out. It was a good ride, but for now, on the sideline, wait patiently to re-enter. Okay, so no need to chase there. Let's talk about uh, pharma. CRISPR, I did not get a chance to reload on my put because it was too high. Okay, so on dips, I will look to reload. Okay, where the highest spread I would sell, the highest spread that I sold over the past couple of weeks has been 57, 57, 53. Okay, so that to me, that's a, and I don't do a lot. I do like two put spread because I would mind owning some share of CRISPR in the mid 50s. Okay, but it has to be in the mid 50s. Like, do I think CRISPR have a chance to go down to this level here? I can't imagine. Nothing is impossible. Okay, if the overall market go through a 5 or 10% correction, trust me, these things will get beat up. Okay, there is no safety in small biotech if there is a correction in the overall market. So be careful. Okay, be ready and be careful that you might have to swallow 100 shares of this if there is a 5% correction in the market, because a 5% correction in S&P 500 can knock this thing down below 50 in a hurry. And at that point, it might be a very good place to put some money for the bounce later. Okay, so CRISPR, ARGX, I got my stop in, right? It looked like it filled the gap, and now it's stalling out, which is fine. Would I buy some share? Right now, my stop is in where? 371. Okay, so I don't mind cashing out at 371 when I bought those shares at 333. I'm not gonna complain. Okay, but yeah, I'm not. I refuse to give up a lot of that gain. Refuse. Okay, so if you bought on a dip here between 333 and 330, congratulations, and you'll be very foolish to not protect $40+ of gain. I'm not giving up below 371. Okay, sure, was I looking to get out at 390 to 400? That was the aim. The aim was to get out, to sell the rest of my share at 390 to 405 or so. Okay, that was the aim. I didn't think we're gonna get anywhere near 425. Okay, because look, the 20 MA is coming down, meaning the prior one of the high before the big gap up. Okay, so yeah, in a perfect world, we love to get back to 425, right? The chart lined up kind of nicely on that conversion, right? But yeah, I was looking to get out 390. That's where the order was, 390 to 405. But stop is in. Okay, I'm not giving up 471, 371. I mean, Eli Lilly had been nothing but a bore, but at least it's holding the 100 MA, and I can see it bouncing until earning. Okay, it's just gonna be a stock that it's just consolidating. Okay, that's another term because it went up so much, and it's in a very tight triangle, right? So we'll see. Do I see a breakdown into the 200 MA? It got to be a reason. What is a reason? I don't know. Okay, I'm not bullish or bearish on Eli Lilly. I still hold on to Gilead. I was looking to add, missed my chance down here. I had ordered in. Would I trim? Yes. Where? Up here. Okay, between 82.5 and 83. Okay, That's where the order in to trim some. I don't have a lot, but at the same time, I'm not going to be holding it and be greedy. Okay, if it's 82.5 to 83, most of them will go out at that point, and I will look to re-enter later. Of course, Pfizer, nothing but a big bore, but hey, it came off. Okay, it came off the ugly bottom. It filled the gap. It filled the gap and absorbing seller for the past week. Next gap is of course near 30. So we'll see. Okay, it need to. I don't think it's gonna be hard. Okay, because sellers has been dumping this thing all year. All year, it's been just one of the ugliest looking chart all year. Okay, and I think you're not gonna see a whole lot of. Hey, I could be completely wrong, but I just don't see a whole lot of resistance until we get to that. Okay. To me, yeah. See, bang, bang. To me, sure. Would there be resistance? Yeah, but where I think the big resistance is going to be more on that downtrend. Okay, so for me, right now, it's non-story. It's non-stock that I don't mind holding on to the share I have. It's been a big loser that dragged down performance for the year, but nah, nothing to be excited about that. AppV in the zone. Nothing to do here for me. Okay, nothing to do. I have a few share. I got all the share I had was assigned here. Yeah, in this move here, so I missed out. It's okay. Can it do one of these again and come down again? Why not? I don't understand people that have that FOMO feeling that they're gonna do below 140 trade, and one of the trip lasts a long time. Okay, like this here, this I can't wait to prove you wrong. Okay, that's all I gotta say. It's that's just the way the market works. If you're in the camp that think that a recession is coming, what makes you think that FV is gonna be spared by the market overall? If we have a recession and a 5 or 10% correction or more, what makes you think FV is gonna be spared? What makes you think any stock is gonna be spared? It's nonsense thinking, right? It's if you're buying bonds for safety, thinking that the recession is coming, then keep in mind every equity that you own, every have potential for a lot of pain. Okay, some pain or a lot of pain. To ignore that reality is delusional. Coca-Cola, yeah, I bought a little bit on this ugly dip here, but overall, would I sell at 59.7? Yeah. Would I sell at 60? Absolutely. I will be all out. Okay, all my share if I see anything above 60. Absolutely. Pepsi, struggling. Let's see how it will react the next time it touched the 100 MA, okay, because that was one nasty rejection, but it bounced off the trending nicely, right? So we'll see. That's coming this week. So we'll see if it can get over that and then get back to 172, which I might trim. Okay, for sure. If I see anything near 178, it's an all-out exit. The 200-day moving average. Recession coming in the next 3 months, 6 months, it's a sell. McDonald's, I have been trimming. I trimmed since 294. I trimmed 295, 296. Yeah, and I have more order to completely exit where 300. Give me 300, I'd be all out. Okay, I still have a few share left, at 298, 299, and 300. It's been a nice run indeed. But yeah, it's toppy. Okay, that I think if you're in Palo Alto, be careful. Be very careful. I think this thing can do a nasty rug pull back to the 50 MA in a hurry. Okay, in a hurry. So be very careful. Yeah, I like the company. I trade this stock many times, but right now I don't have any position, and I think if there's a breakdown, for sure, okay, for sure, to me, buying at the 100 MA is not a bad idea. If it corrected down there, hey, once again, it's been down here many times, going back 9 months, right? Many times. So any kind of delusional thinking that, oh, you're never gonna see this price again, yes you will, yes you will. The word never should never be used in the stock market. Okay. Never say never. It's so stupid when you hear people talk like, oh, when people that FOMO into buying stuff, their thinking is never. You're never gonna see this price again. Never. That's why they FOMO, right? Because why else would you FOMO? Well, the obvious is stupidity. But no, be patient. Be patient. CrowdStrike, very toppy here. Very toppy. Same thing here. This thing can come down in a hurry into the 100 MA. You know, the problem with Palo Alto, CrowdStrike, is they're so loved. You turn on CNBC and everybody loves them. That's the reason why they're all like this, okay? Everybody wants them. Everybody's on one side of the boat. It's gonna flip on you. Okay, so be careful. Now the one that people didn't like, got beat up pretty badly. Fortinet, I got beat up pretty badly. I still have 100 shares there. I bought 200. I sold 100 just to cut my position. The other 100 share is pretty much even Steven, so I'm not, it's in the gap down. And then they have another bad quarter, right? So in an area where their competitors are eating their lunch, not a good thing. They're in a hot sector, cybersecurity, but somehow they managed to get beat out, to miss earning 2 quarters in a row. So you got a nasty slide from 81, got cut in half, almost half. Okay, so oh my goodness, it's a miracle that they're able to absorb sellers here. Because imagine that you hold on to this stock, you buy the stock, you got the nasty gap, right? And then optimism of the sector get you up, and then you get another nasty surprise. So I expected this area to be a tougher area to break out. This could be just a fake move up here because of the Santa rally or whatever nonsense, but yeah, I don't expect this to hold, okay, through the 2 gap down. Okay, so there's a lot of sellers, okay, a lot of sellers. But if you can absorb it, a lot was absorbed here. Okay, a lot was absorbed here. So if this thing can get off this range, then on good earning, if they come out with earning in a month and is reverse the negative trend that you see, then yeah, we can see a move. We can see a move. Okay, it can move. It can move a lot. Okay, there could be a 50% move from here. So we'll see. Gotta watch and wait. Watch and wait. Okay, that's all I gotta say. No rush to get in there yet. The quarter Can you believe it? Earnings season start next week. Yeah, we close down the quarter. It's over, right? So once again, earnings season is upon us. I'm flush in cash, looking for opportunities. I think that's about it for this stream. I think I cover many things. As always, if you want me to cover a certain sector, put it in the comment section. Um, it's not much I can say that is new. Okay, the market has been pretty boring the past couple of weeks, to be honest. So no major move in any big stocks that can create buying or selling opportunities. Thank you for watching. Have a happy new year. Enjoy.